For setting of any business or industrial project, long-term loan is required. Generally, long-term loan is financed by any bank, state financial corporation, Sidbi means State Industrial Development Bank of India. And when you will go for getting long-term loan sanctioning to any bank or financial institution, they will ask for the project report. You have to submit a project report along with the application form. Only then they will process for sanctioning the loan. Now, what is project report? Project report is a written document having detailed information of the proposed business or the industry which you are going to set. This can be used to determine the prospects of the business. Preparation of project report is not very tough. You can also prepare it. But how you will prepare? For that purpose, I am going to discuss the process. For any project report, you have to provide 5 types of information. For each type of information, you prepare a chapter. What are the information? In your first chapter, you have to provide the information relating commercial viability of the project. In the second chapter, you have to mention technical feasibility of the project. What are the terms I will discuss, and I will prepare that also I will discuss. Third chapter, you have to show and establish the managerial competency for the project. The fourth chapter will consist financial viability. That is very important and also technical. And last one is the pollution control. Now I am coming one by one to give you the idea, and you can write accordingly to prepare your project report. Now first, commercial viability. What things we mention in this chapter? This is the first chapter. The first point, you have to assure availability of smooth supply of raw materials. That means there is no problem or any hindrance to getting adequate raw materials for your production of the unit. Because the financer will provide you the long-term loan, they always like to assure that the industry or proposed unit will not face any problem. The first point is assurance of the smooth flow of or availability of raw materials. Second point, you have to mention the availability of labor. Labor means all type of labors, skilled, unskilled, semi-skilled. You have to assure where from you will arrange and how it will be available, and there is no problem for getting the labors for the unit. You have to assure that point also. You can write your own language also, there is no issues, but you have to assure that the labor will be easily available. The unit will not face any problem for getting the labor, or production will not hamper for that. And next, this is very important, that is adequate demand supply gap. That is, you have sufficient demand for which you are going to start the industry or business. You have to make a detailed survey and study, and after that you should have to come to the conclusion that still there is a scope for setting a new unit. Suppose you are going to set up a nursing home in any particular area. Already there are 3 nursing homes are going on, and you can get the data at present, what is the position of the demand and how that 3 nursing homes would supply or available seats for the nursing. If you can calculate, still there is a gap That means demand is sufficiently excess than at present available or supply. Then only you should go ahead for the project or business. So under commercial viability, you have to provide all these informations to assure the financer that the project will not suffer any problem in respect of availability of raw materials, availability of labor, and adequate demand, that means sufficient supply demand gap. Now I am coming to the next point, that is next chapter, chapter 2. Under this chapter, the heading of this chapter will be technical feasibility. And what are the points will come under this chapter? First, cost competent manufacturing process. It is very important. That means how you will produce the product for which you are going to start the business or industry. That is the manufacturing process. If it is a multi-product, then all the processes for the production. Only produce the product is not enough, not sufficient. Cost competent manufacturing process. That means your output, your production of the units will be the best price in the market. One product may be produced in different ways, but you have to select that one which is cost competent. That means that process which compete the available products in the market. This is the first step. That is cost competent manufacturing. You have to narrate the detail of the manufacturing process and why you are going to accept that manufacturing process and what will be the cost. Everything should be discussed here, so that the financer will satisfy that the manufacturing process is acceptable. For that manufacturing process, to satisfy that manufacturing process, what are the plant and machineries required? You have to prepare a list for that, and also at the same time get the data or cost of the machineries available from the market, and finally estimate the cost of plant and machineries, because this cost will go to your project cost and means of finance statement. Next, selection of suppliers for selected plant and machinery. From where you will purchase the plant and machineries, you have to select their suppliers. That is also to be mentioned in your project report. If few machines are required to be imported, then you have to mention the legal processes for the importing of machineries, and it should be satisfied by the financer. Yes, it is possible and it is acceptable. Next, under technical feasibility, the next item is civil construction, estimation of civil construction. First, what civil constructions are required with measurement, and finally you have to assess the cost as well as the drawing, civil drawing for the civil construction, like say office, factory, godown, internal roads, boundary walls. All items will come under this head, that is civil construction. And at the same time you have to estimate the cost, and from which you will get the total cost of building construction, civil construction, and you also have to include or attach with the project report the drawing of the civil construction. Next, implementation schedule, that is timeline. How much time will require to acquire the land, then completion of the civil construction, installation of your plant and machineries, electricals, trial run, and finally to come into commercial productions. The timelines you also have to mention under this chapter in your project report. After studying all these things, all these items, the financer will satisfy that the project is technically feasible. That is, the manufacturing process is okay, plant and machineries are available in the market, and if imported machineries are required, then it is possible and sufficient legal processes has already been done. Then estimation of civil construction, all these things you have to mention under technical feasibility. Okay, that means we have completed 2 chapters. You can write all these things. If you know, then you can write by yourself also. The third one, this is also very important. The financer is taking the risk of financing a huge amount over a long period of time, say 8 years, 10 years, 15 years, 20 years. That's why they want to assure the competency of the managerial person. Who are the persons behind the project? Their competency. That means promoters. First of all, you have to mention in your project report the basic information of the promoters. Their name, address, age, Aadhaar number, PAN, etc. This is the basic information. If it is a proprietorship firm, then only for the promoter, that is the proprietor, you have to mention all this information. If it is a partnership firm, then for all partners, you have to mention all this information in this way. Educational background, what qualifications they have got, that means the promoter's qualification, and their business experiences, because financer want to assure that the project will run successfully. If the promoter has not sufficient experience, not qualified, then the project may fail. That's why in this project report you have to assure that it is possible. The promoter has got sufficient educational background, maybe higher secondary and above, graduation, post-graduation, PhD, technical qualification, cost accountant, chartered accountant, whatever it may be, qualifications, and different business experiences. Now you have to prove that the promoters have sufficient knowledge and experiences that they could run the business. Now, constitution of the business, you also have to mention in detail under this point. If it is a proprietorship firm, you mention it. If it is a partnership firm, the detail of the partnership deed and the portion of profit, the related information you have to mention here. Creditworthiness, that is also very important. Creditworthiness of whom? The promoters. Because promoters also has to invest money, which is called margin money, for the project. How they will bring that contribution, whether they are financially sound or not, you have to justify that. In what form they have the fund for investing in the business. Suppose the promoters, you have to give the list of the financial assets. It may be fixed, it may be savings or fixed deposit, savings bank balance, golds, ornaments, land in his name, others, assets, properties, like that. And ultimately, you have to estimate and prove that the promoters are financially sound, sufficient sound, and they will be able to contribute the promoter's contribution. So this is the managerial competency, that the financer will assure that the promoters are sufficiently capable to run the project and it will not fail in future. Only then they will go ahead for financing. Next point, financial viability. This is a bit technical. I will discuss how we'll prepare it, but what things we have to show under this chapter. This is very important. Actually, by this, financer will assure that sufficient cash will be generated from the project to cover up the running expenses as well as the repayment of loans. To establish all these things, these statements have to be prepared and is to be incorporated with the project report. What are the statements? Project cost and means of finance. I will show you one by one the format of this statement and how it will be prepared and where it is, how it is difficult or not, and if it is difficult, then how we will manage it. So first, just I am mentioning what are the statements. Project cost and means of finance, profitability statement, cash flow statement, break-even point analysis, working capital calculation, in which bank loan also has to be mentioned, accounting ratios, incorporating return on capital employed, that is ROC, DSCR, debt service coverage ratio, depreciation chart, repayment schedule. All these statements are to be prepared and attached with the project report under this chapter. Now the question, how you prepare? You are not a finance person. You are only a general person. Then how you prepare? So in my next video, I will show how you can prepare it, but at the same time, it is definite that you have to take the help of any person who has some financial background, because this is a technical part, technical statements. Now I am going to show you what are the formats for these statements. That means for these statements you have to take the help of a person who has a financial background. If you have the financial knowledge, at least become honors level, then no issues, you can prepare by yourself also. That I will discuss in my next video. Now I am just going to show you the format only. Even I will not discuss in detail the format, just I am showing you the formats. Otherwise the video will be very long or large. So first, project cost and means of, one by one I will show the format. Only the format, but all this format you have to prepare to attach with your project report to establish the financial viable project. And only then the financer will sanction your loan and you can proceed for setting your industry. First, project cost and means of finance. What is the format? How it is presented? This is project cost and means of finance. Under project cost, all these items will be there. You read slowly and you will understand. Land cost. This is the cost of the land, building cost, plant and machinery cost. This is technical know-how. If you acquire technical know-how, the cost of that, contingency, all these are the part of the project. I am not going to discuss here in detail, then the video will be very large. Okay. And means of finance, in this case, for this case, the total project cost is 21,25,000. Here on this column is given existing. If it is a existing company or existing business and you are going for expansion, that's why two columns have been prepared. But if it is a new, then only this column. That's why existing and proposed. Suppose existing, the land already acquired is say 2 lakhs and you are going to add land 3 lakhs, then total will be 5 lakhs in this way. The total cost for this project is 21,25,000. Arbitrarily the data is given, but practically how we'll do that I will show you in a different video, separate video. And the package I will show how it is developed, and one who has the knowledge of finance, not very difficult to develop it. And this is a means of finance. Where from this fund will come? This is means of finance. How will arrange 21,25,000? That is the breakup is shown here. Means of finance. Share capital means owner's contribution, say 5 lakhs. Subsidy, if government is giving subsidy, then it is given. In this case, it is given 4,21,000. I arbitrarily have taken the data. Deferred payment. All these items are given. Term loan is here. That means 12 lakhs term loans have been proposed. And the total is 20. Slightly, it is a computational mistake. 21.25. Here also should be 21.25. Some mistake is here. You can say, suppose you can add, how much, what is the difference? 4,000 only. You can add the subsidy, say 4,25,000. Then it will be same. It is a mistake. Okay. And security margin. Margin means the portion the promoter has to bring. That is here mentioned. This is project cost, means of finance. In this way, just I am showing the format. You read the format slowly and then you will get all the items. Profitability means profit earning statement. Here all the cost breakup is given. The raw material cost, salary and wages, repair maintenance, how it has come and how it is prepared. That I will discuss in my next video. Don't worry for that. Here I am just showing you the statements, a project report, how it is prepared, what are the things are to be reported there. That I am only going to show you here in this video. And how we'll prepare, that will be discussed in a separate video. So this is interest, the cost, interest on bank loan and all these things. And ultimately net profit, profit after taxes. This is the net profit and net cash accruals. And lastly, average DSCR, how it will be computed. And in your case, I will show you that how we'll develop a package on Excel, that I will show in my next video. Then automatically all these things will be calculated. Okay, so this is the profitability statement. Next, cash flow statement. All these are the item. On this side you will show sources of fund, and this is uses of fund, user disposition of fund, and you have to establish that each year sufficient cash balances are there to run the business. Cash flow statement will confirm that. This is the format for cash flow statement. And break-even point also you have to calculate. All these have been calculated on the basis of the basic information that I will discuss in my next video. Break-even point also you have to calculate. In this case 35% the break-even point, and these are the items. You will read it slowly. What are the items will come under this, and how will compute that I will show in the next video. This is the working capital calculation. It is also required to show. 0.5 means half month, 0.25 means 1 week. This is the stock. Raw materials you are for working capital. Raw material stock is for half month. Goods in process 1 week. Finished goods half month. You have to keep in your godown. Receivables for 1 month. In this way, and how you have computed that I will show and I will discuss in my next video. This is the structure of working capital calculation. The bank loan required is calculated and shown here, and what will be the interest? It is assumed that 18% interest rate is being charged per annum, and accordingly the interest first year, second year and third year is shown. This is the working capital calculation. Next, this is the depreciation chart. It is arbitrary data taken. This is 5% for building depreciation rate. Plant and machinery is 10%. Now other fixed assets 10%. Written down value method. The detailed first year, second year, third year, the depreciation amount is calculated. Actually, this depreciation charge will be to the statement of profitability. You have to transfer this cost to the profitability statement. And similarly, and here it is shown the straight line method also. And actually here I have shown the input data format. What I am going to discuss in my next video. Sorry, it is not possible to discuss with this video. Then the video will be very large, bulky and cumbersome also. That's why just I am giving you the hints in this video how we will tackle the preparation of this statement that I will show in different video. Actually, I will show in that video that all these are the inputs you have to give in Excel sheet. The land cost, you have to assess the land cost, required land cost. In this case it is 0. Suppose it is not required, it may be in this case the free land has got from government or like that, that's why. But if it is cost 2 lakhs, then it will be given 2 lakhs. Building cost 5.40, plant machinery cost 7.17. So all these costs, depreciation percentage 0.05 means 5%, 5%. Written down depreciation percent for plant and machinery is 10%. In this way, these are the inputs. You have to decide first what will be the input. Stock of raw materials, how much period you will keep in your stock of raw materials, say half month. That's why 0.5. It is given in Excel sheet in this format. Goods in process 1 week 0.25. The first year capacity is say 50%. That's why it is 0.50. 50% is 0.50. Second year capacity is this. Then raw materials at 100% capacity is required 35.05. Sales value at 100%. You have to estimate all these things and put in the Excel sheet. And after that, you have to develop the package. I have already done it and I will show how it works in my next video. You can also develop that package. The beauty of this package is that instantly the calculation of all the statements will be prepared and get ready, and the output will be shown in the computer. From that, the financer can take decision, should we go ahead with the project or not. Some parameters are set by the financer. If it is not satisfied, then they will not go ahead with the loan, sanctioning of loan. Say DSCR. DSCR at least must be 2:1. If your DSCR is say 1.7, then they may reject the project, or below than that. But another advantage is that as the total package is developed on Excel sheet, what if analysis basis, that then if there is a scope for say getting the more sales value or low raw materials cost, you can change the value and can check the DSCR or viability of the break-even point like that. And it will be instantly. Only if you put the data, change data, immediately the output is ready. And you can see the project is acceptable or not. Previously, when computer technology was not used, actually in my case, this package is 100% developed by myself before around 15 years back. Before it was prepared manually, and for one project to prepare all these statements, a skilled person who has the idea to prepare all these statements and the inputs, at least 20 hours are required to prepare one project report. But after development of this package through action sheet, then it has become a very efficient process. Only you calculate the inputs that time is required, and if you put the input, if you insert the input in the actual package sheet, and which takes maximum 2 to 3 minutes, and instantly you will get the result. And how it will be done, that will be shown in the separate video. I think we have got the idea, the entire project report. So again, I am summarizing. Though your project report will consist of 5 chapters. Our last one is pollution control. Pollution, I have till now discussed up to financial viability, 4th chapter. 5th chapter is also very important, that is pollution. Because pollution, if occurs say leather industries, stone chips industries, then the society will not allow to run the project. That's why you have to very careful for pollution aspect. How you will dispose your wastage, and it should be very scientific process, so that society should not suffer, your environment should not suffer. And you have to take the certificate from pollution control board. Only then you can go ahead with the project. That means your project will consist all these 5 chapters, and you have to assure that everything is at par and acceptable, and only then the financer will go ahead for sanction of loan. Thank you.